Good morning, it's Jeffrey Cohen, U.S. Advanced Computing Infrastructures. I'm the president and investment advisor representative. We're registered in Illinois. So we're here to talk today about some big news. We're going to look at pre-market. We're going to look for a risk-on day today. And you know, all the equity markets are green, so risk-on should lose you a lot of money, but maybe not. So we're going to look pre-market, we're going to look risk-on, and I'm going to share some big news in the call. So just to start it off, obviously the S&P futures are negative. They're red. NASDAQ futures are down a full percent. The stocks we're watching, though, aren't really down this morning. So this may be a false message. Let's take a look at FinViz. Let's look at their pre-market indicators. And what you'll see there is the VIX is up to 20, which is not really up at all. It's down. You divide the VIX by 19.2, and that's roughly speaking the break even for the insurance percentage drop. So 20.1 divided by 19.2 is something like 1.05, or a 1% decline in the S&P 500. That's kind of your break even if you're buying insurance. You look at the spider at 402.32. I remember not long ago it was well under 400, like 390. So the fact that it's gone, will it drop 4 points? Maybe. It's hard to know. But the S&P 500 just generally is up. It's up. It's at 40.50. I had said something about a head and shoulders movement being confirmed at like 4,200. So you're not that far away from what would be a telltale resistance sign. But I love it. The market's up. People are happy. They're making money in their 401ks. I think it's great. NASDAQ over 12,000. The Russell's 1,900. These are elevated levels for the S&P and for the U.S. equities. So the question is, will they go up in a straight line, or are they going to continue to go up and down, up and down? I honestly, I don't know, but interesting. The 30-year bond at 129.66. Now, we've seen this, you see it on the chart. It's been over 132. So interest rates are reaching, a low. What I would say is it's like a double bottom on yields for the 30-year. You see that at 132. It's hit it twice. On the 10-year, it's actually hit 116, and now it's back to 114. And so it's coming off, right? So 30 years much closer to the peak than the 10. So copper, we've looked at copper a long time. This thing was ranging around $3.50 a pound. You're now looking at 420. This is an inflation bet to some extent, but it's also there's no recession bet. So when copper goes up, it pretty much means production is going to go up. And I think I read somewhere most copper stockpiles are actually associated with China. So it could be a China reopening trade. Silver at 23.80, pretty elevated, but you see it's been at that kind of tight range. So the question is, where we at? Oh, and the euro at 129.25 is crazy. So the dollar has been weakening. Now, I haven't been following FOMC and the Federal Reserve Bank. To be honest, I've been more worried about tax returns and doing our fund accounting and all that kind of stuff. But wow, the dollar is dropping pretty dramatically. It's 10% different than where I remember it not long ago, in November. So for the dollar to depreciate 10% is a big move. So risk on. What does that mean, and what do we see? Obviously, we see red everywhere. We see futures are red. It's not just equities. Bonds are red, which means interest rates are going up a little, not a lot. Gold is down. Silver's up. Silver's got some economic play to it, but copper's down. Crude oil is down. Gasoline, by the way, gas has gone up in Illinois. It's like $3.79 a gallon off of a $2.55 wholesale. So they might have brought back the sales taxes on gasoline and not told us. So, okay. Oh, one last thing. Let's look at world indices. Somebody had posted something about how, some index had gone up or down or something. So, the Hang Seng is down 2.73%. It's interesting, right? Because Hong Kong going down, but you look at the Shenzhen is up 1%. So, interesting. You look at Australia is about the same. India, it's up a skosh. Jakarta, by the way, we love Indonesia. We love Malaysia. These guys are pretty flat. New Zealand is flat. South Korea is down 1.3%. So why would Hong Kong be down and why would South Korea be down? That's an interesting question. Don't know. I do see Europe, it looks down today. Europe, down in the dumps. By the way, Nikkei's up 0.2, but that's, again, not a lot. The FTSE's break even. All of Europe is down. So there's some bad news out there. Started with the Hang Seng. I don't know. The Hang Seng looks elevated over 5 days. It looks elevated over a month. In fact, it's really recovered since October 14.6 to 22. That's not really a fall. That's more of just a slight give back, consolidation of gains. You look at the Kospi, right? South Korea, you look at how high that's been. It looks like equities have really been recovering. If you've been sleeping in a hole for the last 6 months, you probably haven't noticed it. But just not moving. Not moving. So the question is, markets are up and then down and then up. So let's look at the S&P with that same lens. It looks a little down, right? But actually, if you look, it's really, since January 25th, it's really screamed higher. You look at it over 6 months, it's really bottomed at around 3,600. It's up 4,000, so it's up 10%. That's actually nice, maybe even 12%. There's no sadness here in these markets. So the fact that it's given back 1% here and there, it's just normal chop in the market. So when there's normal chop in the market, maybe risk can go on. Maybe people are watching this video. Maybe there's trading desks getting together this morning and saying, "Oh yeah, we're gonna go risk on. We're gonna bet big." So Corbis, on the other hand, not betting big. Corbis is for anyone who's followed the show, Corbis is my favorite stock. It is a biotech that is probably my worst nightmare. And, oh my God. Wow, is that crazy? All right, so Twitter, not that exciting this morning. Nope. Oh, so let's talk about some big news before we get into specific stocks. So my wife asked me to bring back the goatee. I shaved it off in prep for discussion with Fidelity Investments, and she said it makes me look too corporate. She says I don't look like her husband anymore. I look too, clean cut, too tough, too serious. She said, "Jeff, I like you with the goatee." So I hope my colleagues don't mind. I hope you don't mind, my followers, my loyal listeners. And I want to look my best for Mrs. Chicago Quantum. So I'm bringing back the goatee. You can follow it here, by the way, right on my YouTube channel. Always glad to show it to you. So let's take, so that was the big news, by the way. It's not that big, but it's kind of interesting. Let's take a look at some stocks. So what do we have? I don't even know what we have here yet. I don't really care about the banks. Banks I don't care about. Let's start with negative beta stocks. Premarket. Guys, this is what's interesting. The negative beta stocks are up, which kind of makes sense. But these are the ETFs, right? The ultra shorts, the VIX. But what's interesting is Veru and U-Haul is up, while Telesis Bio, Houston Energy, and Berkshire Hathaway is down. So your negative beta stocks, you have 3 of them moving with the market, you have 3 unchanged, and you have 2 of them up. This is just the common stocks. But what I call the synthetic negative beta stocks, they're up. They're up, and they're exciting this morning. Look at that. The VIX short-term futures, the UVIXY. Let's see if I can get a listing on that one. Yeah, the UVIXY at 508. It was at 486 the last price. So this thing's up almost 4.5%. That's big. Let's take a look at the stocks that halted. Remember we had that big day when the stock market halted on a lot of big stocks? Most of them are down. So my thought is that the New York Stock Exchange didn't have a random error. My thought is that there's something to this. There's some reason why these stocks are down, and my guess is, so some of them are your crappy meme stocks like AMC, Wayfair, Shopify, even Lumen is becoming a meme stock. Lumen's doing awful. But a lot of good stocks too are down, and I have a feeling that these are the stocks that, like Goldman or some big trading desk, Citadel, they're like, look, we have 80 stocks and we could work those. We don't have to work the whole S&P 500. I mean, it's something to sell 500. It's better to sell 80, right? So some are up, but there are things like PBR, Petróleo, Brazil, Main Street Capital, which you don't really see traded much. I mean, Unilever's up, but that could be a European flavor. Eli Lilly, Altria is up slightly, right? So I'm looking at that and I'm thinking there's a lesson here. Low beta stocks should do well when the market is going down. But if you look, there's like 12 down, 6 up. Low beta stocks are not a safe haven. So the question is, what about the high beta stocks? What about risk on? How's risk on doing, Jeff? It is terrible today. Risk on is in the toilet. This could be a good day to build positions or a good day to short them. Short them to Hades, right? So actually, it looks like it's a risk off day because the lowest beta stocks, or at least some of them, are up. High beta stocks are down. Let's look positive versus negative skew. So your positive skew stocks are down. I always look and see if there's something here. I don't know. Negative skew over the past year, also down. So stocks with a positive or negative skew, down. How about platykurtic, leptokurtic with low variance? Leptokurtic have fat tails. They have the ability to surprise you, to have outliers. They're not a normal distribution. They raise the bell-shaped curve up, and that gives you more meat under the tails. So these should be more exciting. Well, the big fat red, negative, except for Cincinnati Financial Corporation. Never even heard of it. So leptokurtic is down. Platykurtic, your safe bets. Think of them as the bell-shaped curve flat against the x-axis. Fewer surprises. Oh my God, also, well, not so down, right? I mean, you got some weird stuff in there that's up, but, more green than I'm expecting. So platykurtic's looking good. So that's one sign of a risk-off day. Let's take a look at some high-risk industry sectors. So quantum computing. So we go by the brand name of Chicago Quantum. Jeffrey, where can I invest in quantum computing companies? You seem to have done okay. I want a piece of that action. Well, take a look. 3 quantum computing associated companies are up pre-market. 2 are down. That's not so terrible. How about computers? How about B2B? Computers, chips, and software. Well, you see those are down. So Kyndryl, Dish, Microsoft, Alphabet, Comcast, NetApp, Cisco. So B2B is down. This is like a recession bet. Only Wipro's up tiny. So B2B is down. Maybe it's a bet against B2B. Maybe it's because of earnings. Who knows? Trucking and transport. Jeffrey, how are we doing with trucking and transport? Where's my load? Is it on time? No. Now, Yellow Corporation seems to still be recovering, but this is a $161 million stock. This was a bankruptcy play. I liked it at $235, but I didn't bet on it because Yellow has to truly transform before they're going to see a significant rise in the stock price. So I don't think we're done with Yellow. I like Yellow, though. I do. Let's look at semiconductors. Well, the 3 times bull is down 4%. Okay, got it. I don't even need that in there anymore. Let's take that out. That's just a multiplier. But NVIDIA's down, Broadcom, Intel, Qualcomm. AMD. I find it odd that you would bet against the semiconductors. But again, let's be honest. The top 5 semiconductor companies are worth $1 trillion. More than $1 trillion, 1.1. So the question is, are chips and computers worth $1.1 trillion? Maybe. I don't know. Cannabis and tobacco. Woo, are those down? So that's a risk-on kind of a play, right? So cannabis is down. How about steel and physical miners? Reliance is down 5% pre-market. Olympic Steel, Alcoa, U.S. Steel, Nucor. These are top names that are down pre-market. This is a decline in the industrial sector. You got B2B, you got industrials. I don't know. So I don't know how I'm feeling here. Let's go back to the big picture futures. So, and the UVIXI is up. I mean, that's crazy. Let's look at the spider again. It was at 402 something. It's still at 402 something. Interesting. So Corbis, we need some movement on Corbis, guys. I gotta buy a new computer. We need to take Corbis up to like $1. We take Corbis up to $1. I buy a new computer. It would really help me. It would really help me. So I might not even sell the stocks. I might just borrow against them. I like it. So what else is moving today? Let's look at IWM. Maybe we'll watch that. That's the what's NASDAQ? So again, it's down, but at 4050, the S&P 500 is not down. In fact, it is resisting finding a lower high. It is actually trying desperately to break the cycle. And if it goes to 4200, you're actually building a new head. You're actually pushing the envelope. You're going to see some pressure there at 4180. You're going to see some pressure at 4300. But right now, the big pressure is at 4100. And the S&P 500 could still break through. It's just hard to know what's going to happen. So we're going to go back to our risk on. So if we look at negative beta, you can see that most of your negative beta stocks are actually down this morning. Okay? Except for the synthetic ones. So, okay, negative beta is down. How about low beta? These should be the safest bets in the market. They're still predominantly lower. High beta, risk on, rock and roll, casino gambling, down. Chips and semiconductors, down. With the exception of TE connectivity. Okay. Leptocurtic. more down than up, but not all the way down. So leptokurtic, people still like the fat tails. Maybe there's an options play going on here. Pre-market platykurtic. Mixed. Interesting. So then the question becomes, is this just a new market? Oh, and then the halted stocks. Is this like a 0 day to expiration kind of a market? Has the market shifted somehow? And the answer is, I really don't know. I really don't know where the market's going either. I just don't. I don't have it. So we could look at interest rates. It's always interesting. So the 30-year is up 4 basis points. The 10-year is up 5 basis points. The 5-year is up 6 basis points. What that means is interest rates rising at the long end actually means stronger economic conditions. 13-week is down slightly, so money slightly cheaper. So it looks like this is a bet that the economy's doing fine. It's so interesting, right? So let's take a look at, is there some data that would tell us that the economy's doing fine? Let's go to the Census Bureau. U.S. Census. Economic indicators. New residential sales came out on the 26th. New home sales up. Advanced wholesale inventories is flat. November was up. That's not so bad. Advanced international trade in goods up. Advanced retail inventories up slightly. Advanced report durable goods up. New residential construction is down, so people are selling the houses. They're not so much building them. So an inventory, possibly an inventory correction. Business inventory is up, but up slightly. So optimistic. That's going to be good for GDP. So yeah, so the economic information isn't terrible. What else is going on? Looking for some reasonable news here that could be good. You know, we could look at Treasury Direct. So today you have a 13-week and a 26-week, about $108 billion being offered. So short-term bills being offered. And the question is, how are those auctions going to do? So this one is $60 billion. The current outstanding amount is $52 billion. So they're going to be increasing the debt by $8 billion on the 13-week. The 26-week, there's nothing outstanding. So they're going to be raising an additional $48 billion. So that's money pulled out of the economy. That is a tightening, a quantitative tightening. That is very interesting to see. End of the month, quantitative tightening. You know, I don't exactly know how that's going to play out, but it's interesting. It's interesting. Soma Holdings maturing. So on the in the Fed's balance sheet, they have $15.4 billion maturing. So I bet you that Soma is going to want to reinvest. So of this $48 billion, maybe $15.4 billion is just going to go to renewals or rollovers. On the 91-day, it's the same thing. $15.4 billion Soma Holdings. Those are open market accounts by the New York Fed. And so it's just interesting, right? So they're going to offer 60, but they got 15. So in essence, they're offering 108. They got 31 on the Fed balance sheet. They're going to be pulling money out of the system, and yeah, I just think it's interesting. That's not good for the stock market. So maybe that's why the market's dropping a little. You know, it's interesting. You know, you always look for some reason, some rationale, right? Why is the market falling? But A lot of times I think it is more just animal spirits, but, you know, who knows? Markets have been up lately. Markets are not, they're not sad. They've been up. Okay, and so I think what you got to do is you got to look for days where you consolidate some gains, where the Fed wants to take some liquidity off the table. We could look at a chart for liquidity. Reverse repos, right? That's an excess reserves, excess liquidity play. It's coming down to 2 trillion. That's nice to see. That means there's a little less liquidity out in the market. That's helpful. It's helpful. I appreciate that. Total reserves of depository. These are reserve balances with Federal Reserve banks. And you can see this is coming down. These are excess reserves being drained out of the system. So maybe the Fed's feeling a little better, right? The economy's pretty strong. The Fed feels like, you know what, it could pull $1 trillion out. That's interesting. That's some real reserves coming out. That, by the way, those are big money. Big differences. Velocity of money. This is really important, by the way. We're going to look at both of these, M2 and M1. So the velocity of M2 is starting to rise. Now, let me tell you, I've been following this a long time. It's the first time I've seen it at this high a level, 1.225. The velocity of money is rising. That means money's not just being parked in the stock market, but it's starting to get back to normal. The velocity of M1 is not moving. It's the velocity of M2 we see moving. So that will be inflationary if they don't pull money out of the system. Okay. Where are we at with M2? Jeffrey? Weekly, not seasonably adjusted on a monthly basis. So your money supply is declining slightly. Okay. Monetary base. No, it's December. It's too hard to know. This data's crap. Money supply data. How about borrowings? Total borrowings from the Federal Reserve. Total borrowings of depository institutions from the Federal Reserve. You still got like 4 trillion, 4.6 trillion. There's still a lot of borrowings from the Federal Reserve, so that it could be that something's going on and there's some banks in trouble out there. It's possible. But overall, this is a decline in liquidity. Assets held outright. U.S. Treasury securities. It's declining slightly. Not much. Okay. So the Fed data is all looking like it's tightening. I'm finally starting to see some tightening. It's interesting. It's so interesting. I don't understand, but it just is what it is. Consumer financial condition. Nope. Budget. Nope. Yeah, I think I'm just going to close with this. So, this was an interesting morning, by the way. It's 8:04. I feel like I understand a little better what's going on. This is not positive for the stock market. This is negative. Although when the dollar falls, That is positive for the stock market. So the dollar's down. The dollar's down like 10%. Okay? That's positive. Bond rates are up. Short-term money's cheaper, long-term money's more expensive. That's like an economic reopening trade. That's fine. Overall futures red, but you're still at 40.53. You're still pretty high. Corbis did not have any new SEC filings. The futures are definitely red. Economic indicators, though, at least what we can see, are pretty solid. You got upcoming treasury auctions that look to be deflationary. They're going to be sucking money out of the economy to try to fund government spending. Short. Reverse repo is down to $2 trillion. Assets held outright are falling. Federal Reserve balances with reserve banks coming down slightly, ever so slightly. The velocity of money is up. That's a problem from inflation. That says inflation, baby. Big. Big inflation. Yeah, I'm a little nervous about that, actually. I wish I had some better... here we go. Consumer prices. Consumer price index. January 12. Personal consumption expenditures. That's nice. You can see they're up. M2 money supply seems to be declining slightly. Total borrowings of depository institutions in the Federal Reserve, this to me is more of a... It's interesting that banks are borrowing more. I'm not sure I understand that one. And velocity of money supply for M1 isn't really moving. And then in terms of the stuff that we look at, high beta, low beta, negative beta. So negative beta stocks. So the dollar's down again. Negative beta stocks are actually up. Okay. So U-Haul and Veru are now being traded, and Mule or Molecule are being traded pre-market. So somebody knows that we're doing a video on negative beta, and they're deciding to trade negative beta to, I don't know, play some games there. So high beta stocks down. Low beta stocks, take it easy now. Low beta stocks are also down. So high beta and low beta are down. And then we'll go right to semiconductors as a good indicator of where we're at with momentum stocks. Pre-market's negative. So there you have it. Risk on? No. Risk off? No. Just everything's lower. And there's not really a bet right now on risk on. So I think a lot of money sitting on the sidelines. They're going to watch the treasuries. You're still an elevated market. So don't panic. It's just a little bit of chop. And I want to thank you for watching. It's awesome. And I'm just going to say AMA. You want to ask a question? Now's the time. Jeff, I got a question. Why you growing back the goatee? because Mrs. Chicago Quantum wants it. My wife likes me better with a goatee. What's happening with the dollar? Dollar's down 10%. How about interest rates? Long-term interest rates are lower, short-term interest rates are higher, but even short-term rates are coming down. How about stocks? Stocks are up across the board. China reopening trade. Looks good. How about inflation? I'm not sure inflation's over. In fact, this velocity of money supply, which is more an indicator that we're going back to normal money usage, is rising. Velocity of money rising is very, very, very bad for inflation. Okay? But we are pulling some money out of the market. That's nice. So what's going to happen is monetary velocity is going to normalize while they pull money out of the economy, but who knows if that's going to last. So what does that mean for you as an investor? Today, I don't know. Maybe sit back and watch. Maybe find a couple of stocks you like. Maybe some bets that you want to make. And I want to thank you for watching. I'm Jeffrey Cohen. If you want to learn more about our website, U.S. Advanced Computing Infrastructure, Inc. Here's the homepage. We are technology consultants and registered investment advisors. I'm Jeffrey Cohen. I'm the president. I've got a whole Rolodex of people that'll help you if you'd like. We have advisory services. We have project services. We provide a ton of market information. We run managed accounts. We do some work on quantum computing. Got some quantum computing companies we're working on. We're going to be updating more of our quantum computing index. That's going to be fun. I love quantum computing. We got research, PQC. We're now selling some t-shirts. We went back to selling our old t-shirts, right? It's great. So we're pretty happy out there. And if you want to look for something interesting, like a leptocurtic stock, here you have it. It's our third most popular webpage. Who knew leptocurtic stocks were a thing, right? I thought it'd be all stuff like negative beta or top dividends. Negative beta, we really cleaned up this page. People seem to like it, right? Look at that. It's nice. Black, white on black, easier to read from a cell phone. We did that. We did that for you. And so, and if you want to buy a run, best thing you can do, buy an up run, buy a down run, right? Daily stocks, our stocks, 750. But for some of you guys, 750 is way too much money. So we came back with our $150 offering. If you provide us 118 stock tickers, we will run them through our model and we will give you all the data that we provide for the whole stock market for your stock tickers. We'll even give you a spreadsheet at the end that shows your stock tickers, profits, market cap, AOCI, all this great stuff, right? You get a whole analysis for $150. It's like throwaway money. And we do this all for you, and we'll do it quick. So good luck out there. Tough day in the market sometimes, right? And so just do the best that you can. The IWM seems like it's stabilized. The spider has stabilized. QQQ we weren't really watching this morning. And our favorite stock is Corbis, which is trading at 14 cents pre-market. And let's see, how's Corbis look this morning? It's hard to know. We love Corbis, our favorite stock. This thing could go to $1. If it goes to $1, you're going to make a ton of money. You're just going to make a friggin' boatload of money. The stock's looking good. It's looking up, right? So, Corbis, that's our answer to inflation. Because Corbis has money in the bank. They're going to be starting to earn interest. It's going to be great. And hopefully they'll get the new drug into development in a pipeline. They're doing a physical tumor drug. So that's good. And we're watching. Corbis doesn't have any SEC filings or anything like that lately. So good luck out there. Take care. And do not invest more than you can afford to lose. It's a choppy market right now. Bye-bye. Good luck.